Hey guys, Gil Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are brand new, I'm a Forex trader and trading coach over at tier1trading.com. And this is a little video I put together each and every weekend, sharing with you the top trades that are on my radar for the week ahead. I want to apologize a little bit in advance for the lack of energy. It's been a busy weekend. 2 tournament games for my son early this morning. I got another one tomorrow morning, and I'm a little bit dead from all the travel, but the Everton draw versus Chelsea fired me up a little bit as we try to escape relegation, and hopefully gives me enough boost to get through this week's video. Now, last week was a big fundamental week in the markets, both scripted and non-scripted. So the unscripted part was kind of the whole banking situation that's happening both here in the US and over in Europe as well. The scripted part was the inflation data that came out for the US, as well as the ECB monetary policy change. You can expect more of the same this week as we have the FOMC interest rate decision on the 22nd. We have the Bank of England following that up closely on the 23rd, along with the Swiss National Bank as well. So I would expect some type of a slow and more consolidative market prior to these news events, and then kind of a big reaction based off what happened. So we're going to start here on the dollar Canada for our time frame. So dollar Canada, we have interesting situations setting up. We actually have 2 potential advanced pattern formations setting up in the same area. We're going to start with the smaller one. The smaller one is going to be a potential bullish butterfly, and that's going to be this little guy right in here. I'll draw my fib to start things up. Then I'll give you guys some triangles to make it more easily recognizable. So X to A to B. We're currently printing the C leg right here. If we continue to push down to this 127, that is going to be a D completion for a potential bullish butterfly. We also have a potential bullish Gartley pattern as well, and I'll draw that on a little bit, right? Once I get these fibs on, you're going to see they line up in the same area. Our bullish Gartley is going to look something like this, our potential bullish Gartley. X to A, swing high to swing low, A to B. Give me a second just to change the colors, make it a little bit easier on the eyes. A to B, there we go. A B to C right here, and then a CD completion right at this lower 127. So there's a nice mesh point right here between 2 potential pattern completion D points. And of course, the overall zone goes to the bottom of our X leg down here at around the 135.50 level. So potential bullish butterfly here in orange, potential bullish Gartley here in green, right around the same area, that 136 even handle. Keep an eye out for a bullish opportunity here if price is able to push down to this level. The next pair we're going to take a look at is the Euro Canada here on the 4-hour chart. Price has recently put in a nice little double bottom. You can see price came down to our previous level of structure. Look left, structure leaves clues. Gave us a brief retracement off that level, back down to it, and then exploded up. Now, we did reach our inside level of structure right here, but the main level of structure that we're shooting for as far as our bullish move here, if you guys remember, was that 147 even handle, which comes right at the start of this elephant candle, which is what we call the big standout candles in the market. So there are 2 opportunities that can happen here. One could be a 26.18 trade. That's where price action retraces back into the double bottom before giving us another extension up. Think about it like a conservative or a second chance entry at a double bottom, or even like the first chance into a pullback trade, essentially. Another opportunity could be a breakout. You can see price action ended the week with an inside bar. So we know an inside bar, this red bar right here, means consolidation. It's a bar that completes completely within the previous bar here. Now, not only is this an inside bar, but it's an inside bar that stayed in the upper range of the candle, which is going to give us that high and tight flag type of motion if we go down to an hourly chart. So if I just zoom in right here, you can see our previous move up right here, a little bit of consolidation. This is a breakout pattern, so we may, instead of getting a retracement down, just see a breakout right up to that level. But either way you look at it, looking for a bullish move here, heading to the 146.80s to 147. It's a little bit above 147, 147.11 area. But I would take that psychological number into account. So let's just call it 147 flat. Now we're going to head to Canada yen on the 4-hour chart. And this is an interesting situation because depending on your view of structure and your philosophy on structure, you may see this one way or another. And that's the interesting thing about trading and why I love having the debates, but hate having the debates as well, because we can have two different traders just with two general different views on what A means and what B means. And they could have two different opinions, and both of those traders could be right as long as they're sticking to what they believe in and what has been tried and tested for them. That's why the idea that saying another trader is wrong is completely pointless unless you guys have done the same exact study on the same exact pairs, on the same exact sample size, and have the numbers that say one is positive, one is negative. But aside from that whole philosophical stuff, what we have here is price action testing a previous level of structure multiple times. And a long time ago when I first started trading, I looked at this as a very bullish sign. And this has been something that has changed over my years as I've gotten more into the study of price action, where now I see this, and this is actually more of a bearish sign. And I look at this move as being kind of like this. Price action drops down. We get a reaction. This is a really good reaction by the bulls, a very strong reaction. We drop down again. This section is what makes it a little bit tricky, because we do get a lesser reaction and a continued move back down. Now, despite the hold back down here, the fact that we were unable to push higher is not a very good sign for the buyers. It means that there's less buying pressure, because if there were the same buying pressure, we'd be able to push up just as high. If there were more buying pressure, we'd be able to push up higher. The fact that we created a lower high is a negative sign. Now, what makes this situation a little bit wacky is that on the next move, we did create a higher high. So that may mean that the buying pressure is more in play than we thought. So it's not a clear signal. So does that mean that we need to completely ignore this trade? No, but it does mean we need to be cautious. So what I want to do here is I want to go down to my lower time frame. We're going to go to the hourly, and I want to pay close attention to what's happening here, because within all these bigger double bottoms and smaller triple bottoms and whatnot, we have a nice double bottom here at a previous level of structure. Look left, structure leaves clues. We got RSI oversold on the first touch, divergence on the second touch. This is a very good pattern formation right here. Now, the problem is, right, we may not have that confirmation. Now, obviously, if you are someone that sees this as a strong buy, it's a buy at market, right? The double bottom completed right here at about 95, 96 even handle number as well. Add that to our CTS checklist. You can buy it at market. But if you're someone that's maybe in the middle of your analysis, say you're getting mixed signals and you want to take the more conservative approach, and that's why we have those conservative approaches for the times when we have mixed signals, here's what you want to do. You want to bracket this current level, right? Put a horizontal line there, put a horizontal line here. Really, this one should be a little bit lower at these lows, but you guys get the point. If price action breaks out to this upside, we're probably going to continue to retest the highs right here at minimum, right? The lows of these highs, I should say, which actually have to be the highs of the previous highs, just to confuse you guys. But at minimum, we should at least retest this level, if not push higher to this level right here and potentially even beyond, right? If we break down to the downside, this is going to be more like that classic descending triangle formation, where if we just look left real quick, I'm going to go back out to my higher time frame, we can see that the next real potential level of structure, and we can do more work on this throughout the week in the live rooms, the next real level of potential structure is down here at 95.50s and honestly all the way down here at about 94.80s, or maybe let's just call it 95 flat if you want to be safe. So a breakout to the downside can send us at least to 94.50s, potentially even to 95 flat, which is right down here. So this is that wait and see game where you want to be patient as a trader. You want to wait until the market gives you one more clue that says, hey, we're likely to do this. And then once that market gives you clues, that's when we want to take advantage of it. And this is a part of risk management, right? We've spoken about risk management a lot in the past. I actually put out a Trading Coach podcast this week speaking about risk management and kind of the the dangers and some advice of, or the dangers of not taking it into account, and some advice on how you should do it. But risk management isn't just position size, right? Risk management isn't just risking this amount on this trade, right? Risk management isn't just active trade management where you're rolling stops to break even or locking in profits. Risk management is also your approach, right? How risky are you on the trades you take, right? We should always have like different grades of trades. We should know our trades. We should have our really safe trades, our no-brainers, where it's like, yes, every time the market does this, boom, this happens. We should have our more kind of iffy trades where it's like, hey, the probabilities are in my favor here, but everything's not quite lining up. And risk management also comes into play when you're thinking about what trades you take, what trades you don't take. Do you only take kind of your grade A no-brainer trades, right? That's a form of risk management because you're taking the safest route possible. Are you someone that takes your grade A trades, obviously, but you also take your risky trades, right? Or you're someone that trades a bigger position size on your grade A trades and a smaller position size on your riskier trades, right? So when you think about risk management, just don't think about, hey, I'm risking 2% of my account on this trade, or hey, I'm trading this big of a position size, or hey, I'm rolling stops to break even and locking in targets. It also talks about, or also takes into account, what type of trader you are and what type of trades you're taking, and the ability to tell yourself, hey, I need to be in aggressively, or I need to be more conservative and wait for more clues. Man, that sounds like a podcast in its own right. By the way, if you guys haven't done so, make sure you subscribe to the Trading Coach Podcast. 3 new episodes each and every week covering the trading topics that you guys want to hear. How do I know you guys want to hear them? Well, because many of the topics come from you guys shooting me messages and leaving comments and whatnot. So I try to share with you guys my journey as a trader, how I progress, what I'm doing, what I've learned, not just in trading, but in the business world too, and the parenting and fatherhood world of Akil Stokes. But I also want to address the questions that you guys are going through in the markets. That way it can help you along your journey. So check it out, the Trading Coach Podcast, available on your favorite podcasting app. Just make sure you rate, review, do all that fun stuff. That way we can keep being ranked high. We're ranked the number 7th best trading podcast out there so far in 2023, which is pretty awesome. Speaking of something else that is awesome, our opportunity here on Aussie Swiss is awesome. We have rebounded another double bottom, right? We spoke about this last week. I don't remember if this was the one that was at structure. Yeah, this was the one that we had more room to go lower, but we thought we may see a retracement back, right? We have gotten that on the daily. We are holding this kind of pregnant pause right here, but there's not enough here yet to say that this is the level where we're going to retrace. So following up on the message of being cautious, right? Just because we've hit our inside level of structure, I do not think this is a no-brainer sell at all. Keep in mind, we do have the SNB, the Swiss National Bank interest rate decision coming up this week. I believe that's a Thursday, whatever day the 23rd is. I'm going to say it's a Thursday typically because that's, I know US is usually Wednesday, Bank of England is, yeah, so it's going to be a Thursday, but double check that in your calendars. But we definitely want to wait to see those clues first. But from a technical perspective, right, if we end up not holding at this level, so if we end up breaking these highs and getting a bit deeper of a pullback than we thought, the next stopping point is going to be up here around the 63 even handle. So there's room from about 62.30s up to 63. We can look at a classic pullback trade here. Well, if you're a breakout trader, trade the breakout, trade it straight up. If you're a pullback trader, wait for the breakout, the violation, wait for the pullback, and then trade it back up. And this level is going to give you a lot more protection if you're someone looking for, well, targets. It's a great level if you're buying, but if you're looking to sell, this level is going to give you a lot more protection as far as that bigger trend continuation move goes as well. So again, we're not at a bad area on the daily, but I don't think we need to rush into that bearish trade quite yet. I still do think we can pull back a little bit deeper. That's probably going to be a 50% retracement. If I take my Fibonacci retracement from swing high to swing low, boom, right there. 50% right at the bottom of that zone, 618 right at the top of that zone. Not sure if we have any volume indication up there as well. Yeah, so volume is going to come a little bit higher as well. You can see not a lot of volume in this level at all, which isn't necessarily a good sign for a new party being interested. So I would expect this bearish, or excuse me, this bullish kind of buying pressure to continue until we get to this inside level right here. Of course, barring what happens with the Swiss National Bank interest rate decision that comes on Thursday. So hope you guys enjoyed the video. Hit that like button, subscribe if you're brand new, leave me comments if you have any questions about what you saw here. Happy that I made it through. I'm gonna get this produced so I can get out to my kids' match tomorrow. We scored 2 goals today, which is good, but the team lost pretty badly. So hopefully we can rebound and get our first tournament win of the season. But until next time, plan your trade your plan. I appreciate all your guys' support, all of the kind messages that come in each and every week. Again, it does motivate me to do this video. Keep them coming. And don't forget, check out that Trading Coach podcast. New episodes 3 times a week available on your favorite podcasting app. See ya.